Welcome, everyone. Today, we are looking at Topic 9 in your SS1 accounting series, Final Accounts of Sole Traders. This is one of the most important topics in accounting. The final accounts consist of the trading account, the profit and loss account, and the balance sheet. They are prepared at the end of the accounting period. They show the performance and financial position of a business. This topic is guaranteed to appear in your examinations. You must understand how to prepare each of these accounts. Pay close attention. Let us begin. First, let me explain what final accounts are. Final accounts are the financial statements prepared at the end of an accounting period. They consist of three parts. The first part is the trading account. This shows the gross profit or gross loss. It calculates the difference between sales and cost of goods sold. The second part is the profit and loss account. This shows the net profit or net loss. It calculates the difference between gross profit and expenses. The third part is the balance sheet. This shows the financial position of the business. It lists assets, liabilities, and owner's equity. Final accounts are prepared for sole traders, partnerships, and companies. They are used by owners, managers, and investors. Understanding final accounts is essential for understanding business performance. This is a key concept. Now let me explain the importance of final accounts. Final accounts are important for several reasons. First, they show profitability. They show whether the business is making a profit or a loss. Second, they show financial position. They show what the business owns and what it owes. Third, they help in decision-making. They provide information for management. Fourth, they help in planning. They are used for budgeting and forecasting. Fifth, they help in obtaining finance. They are used by banks and investors. Sixth, they help in taxation. They are used to calculate tax liabilities. Understanding the importance of final accounts is essential for understanding their role in business. This is frequently tested. Now let me explain the trading account. The trading account is the first part of the final accounts. It is prepared to calculate the gross profit or gross loss. The formula for gross profit is sales minus cost of goods sold. The cost of goods sold is calculated as opening inventory plus purchases minus closing inventory. The trading account has a debit side and a credit side. The debit side records opening inventory, purchases, carriage inwards, and closing inventory. The credit side records sales and sales returns. The difference between the two sides is the gross profit or gross loss. If the credit side is higher, there is a gross profit. If the debit side is higher, there is a gross loss. Understanding the trading account is essential for calculating gross profit. This is frequently tested. Now, let me explain the profit and loss account. The profit and loss account is the second part of the final accounts. It is prepared to calculate the net profit or net loss. The net profit is calculated as gross profit minus expenses. The expenses include salaries, rent, insurance, depreciation, and other operating expenses. The profit and loss account also records other income. This includes discounts received and interest received. The profit and loss account has a debit side and a credit side. The debit side records expenses. The credit side records gross profit and other income. The difference between the two sides is the net profit or net loss. If the credit side is higher, there is a net profit. If the debit side is higher, there is a net loss. Understanding the profit and loss account is essential for calculating net profit. This is frequently tested. Now let me explain the balance sheet. The balance sheet is the third part of the final accounts. It is prepared to show the financial position of the business. It lists assets, liabilities, and owner's equity. The balance sheet is based on the accounting equation. Assets equal liabilities plus owner's equity. The balance sheet has two sides. The left side lists assets. The right side lists liabilities and owner's equity. Assets are resources owned by the business. They include non-current assets and current assets. Liabilities are debts owed by the business. They include non-current liabilities and current liabilities. Owner's equity is the owner's claim on the assets. It includes capital and net profit. Understanding the balance sheet is essential for understanding financial position. This is frequently tested. Now let me explain the classification of assets. Assets are classified into two main types. The first type is non-current assets. These are assets that are held for long-term use. They are not intended for sale. Examples include land, buildings, machinery, and vehicles. Non-current assets are also called fixed assets. The second type is current assets. These are assets that are held for short-term use. They are expected to be converted into cash within 1 year. Examples include inventory, debtors, cash, and bank balances. Current assets are used in the day-to-day operations of the business. Understanding the classification of assets is essential for preparing the balance sheet. This is frequently tested. Now, let me explain the classification of liabilities. Liabilities are classified into two main types. The first type is non-current liabilities. These are liabilities that are due after more than 1 year. Examples include long-term loans and mortgages. Non-current liabilities are also called long-term liabilities. The second type is current liabilities. These are liabilities that are due within 1 year. Examples include creditors, bank overdrafts, and accrued expenses. Current liabilities are debts that must be paid soon. Understanding the classification of liabilities is essential for preparing the balance sheet. This is frequently tested. Now, let me explain the difference between gross profit and net profit. Many students confuse these two terms. Let me clarify the difference. Gross profit is the profit made from buying and selling goods. It is calculated in the trading account. It is sales minus cost of goods sold. Net profit is the profit made after all expenses have been deducted. It is calculated in the profit and loss account. It is gross profit minus expenses. Gross profit is higher than net profit. Net profit is the final profit of the business. Understanding this difference is essential for understanding profitability. This is frequently tested. Now let me explain the difference between capital and drawings. Capital is the money invested in the business by the owner. It is a credit balance. Drawings are the money taken out of the business by the owner for personal use. Drawings are a debit balance. Capital increases owner's equity. Drawings decrease owner's equity. The net profit is added to capital. Drawings are deducted from capital. The closing capital is the opening capital plus net profit minus drawings. Understanding this difference is essential for preparing the balance sheet. This is frequently tested. Now let me explain the difference between a trial balance and final accounts. The trial balance is a list of all ledger balances. It is used to check the accuracy of the ledger. It is prepared before the final accounts. The final accounts are the financial statements. They include the trading account, the profit and loss account, and the balance sheet. They are prepared after the trial balance. The trial balance is used to prepare the final accounts. The trial balance is for internal use. The final accounts are for external use. Understanding this difference is essential for understanding the accounting process. This is frequently tested. Now let me explain the importance of depreciation in final accounts. Depreciation is the reduction in the value of a non-current asset over time. It is caused by wear and tear, obsolescence, and age. Depreciation is an expense. It is recorded in the profit and loss account. It reduces the net profit. Depreciation is also deducted from the asset in the balance sheet. This shows the net book value of the asset. There are different methods of depreciation. The straight line method and the reducing balance method are the most common. Understanding depreciation is essential for preparing accurate final accounts. This is frequently tested. Now let me explain the importance of closing inventory. Closing inventory is the value of unsold goods at the end of the period. It is an asset. It is recorded in the balance sheet as a current asset. It is also used in the trading account. It is deducted from the cost of goods sold. Closing inventory is valued at cost or net realizable value. whichever is lower. This is the rule of prudence. Closing inventory affects both the gross profit and the net profit. It also affects the balance sheet. Understanding closing inventory is essential for preparing accurate final accounts. This is frequently tested. Now let me give you sample exam questions to prepare you for your test. What are final accounts? Final accounts are the financial statements prepared at the end of an accounting period. State the three parts of final accounts: the trading account, the profit and loss account, and the balance sheet. What is the trading account used for? The trading account is used to calculate gross profit or gross loss. What is the profit and loss account used for? The profit and loss account is used to calculate net profit or net loss. What is the balance sheet used for? The balance sheet is used to show the financial position of the business. State the classification of assets: non-current assets and current assets. State the classification of liabilities: non-current liabilities and current liabilities. Explain the difference between gross profit and net profit. Gross profit is sales minus cost of goods sold. Net profit is gross profit minus expenses. Let me summarize everything we have covered today. Final accounts are the financial statements prepared at the end of an accounting period. They consist of the trading account, the profit and loss account, and the balance sheet. The trading account calculates gross profit. The profit and loss account calculates net profit. The balance sheet shows financial position. Assets are classified as non-current and current. Liabilities are classified as non-current and current. Gross profit is sales minus cost of goods sold. Net profit is gross profit minus expenses. Final accounts are important for showing profitability and financial position. Understanding final accounts is essential for accounting. This is Topic 9 in your SS1 accounting series. Study it well. It is guaranteed to appear in your examinations. Well done.